Hello student, welcome back to IFRS. Let's jump to the topic and understand it. Element of income statement, in which first of all we will discuss about revenue recognition. Revenue recognition is very important to know because the first element of your income statement. Look, if you are having any business, the revenue will come two different way. Either you are selling product or you are giving service. Do you think you can do anything else? No. Normally either you are manufacturing by yourself or you are purchasing from some vendor or selling it. Either you will sell product or you will give service. For service you will have payroll related cost because you can't give service without having, or you have app or something. To app you are giving service, for also supporting the app kind of stuff you will need a software engineer kind of stuff, so their payroll cost will come. Majority of your revenue is divided between two parts. Either it is production based or it is supply based. For service based, how you are going to recognize this is again based on the nature of service. So service would be divided into two parts. First one is either you complete or completion of service, that time you are generating your invoices, and another is as a service provided over the time you have generated revenue before, and your services keep on going. In case of insurance, in case of rent advance, if you receive rent advance for entire years or maybe for quarter, so for those, if you have generated revenue, so you will not directly recognize into your income statement. You will have to keep it into deferred revenue because you have generated in advance. In case of advance payment you receive, that is separate part, that will be going to your unearned revenue. Unearned revenue, that is separate than this revenue recognition principle. This one is, we are talking about advance bill generated. This is advance payment. Advance payment will go to your unearned revenue in your liability section. This will be going to, again it will be the part of your liability, but that is one part you will recognize into your AR versus deferred revenue. Deferred revenue will be in your liability and this one will be in your current asset. This is again based on period, how long, if it is more than 12 hours or you have received for 3 or 4 year rent, so that, or you receive some kind of advance like deposit kind of stuff, so those things will go to your long term liability and remaining part will remain into your current liability. Likewise you have to categorize. So this is the overall explanation. In case of service, you have to be classified between two parts, and service is either performed or delivered. Whenever you are giving service, either you have already completed your service. If somebody come to you to their clothes, so you have stitched their clothes and then you are giving him the clothes and they are paying you. Paying, you can recognize your revenue, and service you have already performed. In case when he come to you and he has given you cloth to stitch and make it design as he wants, that time if you receive money, so you cannot recognize, you will follow this method. But he has not paid you at that time, and when he come back and then you are giving him product, I mean to say you have done with your service and you have completed their task and then they are paying you money, then you will apply this method. I hope it is clear to you. Now we will learn about the product related revenue recognition. If you are supplying the product, so we'll understand first the definition. Revenue from the product supply is earned by selling goods or product to customer. This includes sales of manufacturing good, retail product, or any other tangible product like course. These are the item will be your product. When you can recognize revenue at point of sale. And what does it mean? They are trying to say for product sales, revenue is recognized at the point of sales when the product is delivered to customer and the risk and reward of ownership has been transferred. This means that revenue is recognized when the product is delivered and the customer has the ownership. So either risk or reward has been transferred and product has now controlling the product, they have ownership, and or they have consumed. There may be chances if you have given your product to review or something and they have consumed those products. So for those cases also this company will consider this has been sold like this way. For example, retailer would recognize their revenue at point of time when the customer purchased the product from a store. If somebody is coming and he is purchasing your product, at that time they will take the possession, they will pay us money and in return they will take the possession. Possession is something like taking the ownership of product. and regardless of whether the payment is received immediately or on credit, they may pay through the credit card or something. If it is a big buyer from us, so we may give him, in case of, this is talking about FMCG point of view, but if you are a buyer of FMCG and your supplier is giving you product, in those cases you may buy this kind of product for your store on credit. So even when you receive from your supplier and it has come to your place and you have taken the ownership, so reward and ownership you have taken, and you are going to sold those products, so now it is your product, so all risk and reward and everything at your point, and he has delivered you goods at point of time the sale has been considered. Whether you make a payment or not, that is separate. But in case of FMCG, when we as an individual is going to buy from some of the store, at that time we are making payment simultaneously while taking the delivery. But in case of big company, they may purchase product on credit. But the point here is, when you take the ownership, so your reward responsibility has also been transferred at point of time. So that time you can recognize your revenue. I hope it is clear to you. Percentage of sales completion like this. For example, this is mostly used in construction business. You can see long-term contract. For example, you have completed 2 floor and then you have completed 5th floor after 6 months, 3 months. Then after 12 months, you have completed 15th floor. 2 year you have completed 20 floor, as well as all the other electricity work and the wooden work, as everything has been completed in 2 years. So what will happen? 2 year you will divide among the quarter basis. So how many quarter would be in 8 quarter? So for example, you have to be received 20 million continuously 2 year when you are delivering this kind of service. As on when either you entire building you can consider and ask them to make the payment. So 20 million you will divide by number of quarter. Total we have 8 quarter, make it 16 million. So it will be easy. So divide by 6. So 2 million you need to receive from every quarter. Out of 2 million, there is maybe, when you are making hundreds of flat. So you will divide 2 million by hundreds of flats. So whatever the amount is coming, so every flat owner will give you this much amount. Like this, if you club together, you will get your 2 million for completion of 1 quarter. Likewise, when you are getting, you are again investing your money in this business and you are keep on working on it. So like this is the concept is being considered as a percentage of completion. And cost recovery basis is also some kind of similar concept. Highly uncertain, recognized revenue only after all cost of sale has been recovered. So the major difference between percentage of completion and cost recovery, this is based on high uncertainty. There is chances that you will not get your money fully. Only you will. So that is why, for safer side, what they will do, they will say, if this is the process of this much and if we have completed this much, similar way, so at that time for quarter 1 you are getting 2 million, but your cost of creating this may be 1 million. So you may not get 2 million, so you will get 1 million. So you have to recognize revenue for 1 million only. If your product is $100 and your cost of product is $80, so you will recognize revenue when you are selling this product only 80. As in when you receive 20 your profit, that time you will recognize revenue as well as you will recognize your profit also. Initially when you are selling this product, that time you will recognize revenue, or while creating your invoice you will book for $80 only. So similar concept is applicable for when there is uncertainty is very high, there is high chance of not getting the net profit, or you can say not getting the benefit other than the total cost. So for safer side, what they do, even this kind of business, instead of 2 million they will raise bill for 1 million based on the cost. And this is normally happen for government contract. If you are making a road or something, okay, for 100 kilometer and 100 million is the cost. So as and when you have completed, this is the cost and you will get the revenue maybe 200 million. As and when you have completed 10 kilometers, so you will bill to the government for 10 million only, just cost basis. And when he will pay you 10 million, you will work further, and if he may chances, he will pay you your revenue or profit. Once you have completed this task, then you have already billed for hundreds of million and he has also paid you hundreds of millions. So now you have recovered all your cost. Now we'll pay you the other 100 million after completing this product. You will raise your bill, or maybe at a point of time when you have completed 10 million, that time you will raise two invoices. One is cost recovery and another is profit related. So but when he is going to pay, maybe he can pay by this time also. If he will pay, that time you will recognize this one in your revenue. But I hope it is clear. Whenever you are raising your bill, you will raise only for the cost which you have incurred, and then he will be keep on paying you. So for cost related already you can recognize into your revenue, but as and when he is paying you for your profit related stuff, then you will recognize your revenue. Either that time if he is paying you 10 million for your cost and 10 million he is paying for revenue, so that time also when he paid actually at that date, you can recognize the revenue. Then you work further, again you bill, and again they will pay you. Again if he is paying you for your extra than your cost, so that part will be your revenue again. So likewise it works. I hope it is clear to you. In this case what we are doing, we are billing for our cost as well as our profit also, including both. I mean to say revenue and expense, both we are claiming to him. Not exactly this revenue and expense. I'm trying to say the revenue inclusive of your expenses. You are claiming your cost as well as your gross profit also. So if both you are claiming, so that will be the percentage of completion. When only cost you are claiming, that will be your cost recovery basis. This is for high risk of not recovering the revenue. If you are in risk, you don't know whether you will receive or not, then you apply this method. When you know that you will get the revenue, you will get your gross profit also, that time you will apply percentage of completion method. I think is clear to you. So rest these two product bases I have just now explained. Whenever you deliver the product, simultaneously you can claim your revenue. This is normally being received at the time of supply, and whether you receive payment or not, but you can recognize when you have delivered the product as well as you have delivered the ownership to them, and risk and reward has also been transferred. Installment basis is for normally insurance and anything for that. For example, maintenance service you are giving, or you are taking maintenance service from your any of the vendor, and he is billing you for entire year, but he is giving you like pest control, AC maintenance, like insurance for your laptop kind of stuff. For those things you will be paying him monthly basis, but or maybe you paid in advance, you will be claiming those kind of expense monthly basis into taking to your P&L income statement. The person who has billed you for 12 months, he will also not recognize everything in their revenue. He will also book into their deferred revenue, and then he will be from deferred revenue, he will move into this revenue every monthly his income statement, and you will be booking expense in your statement monthly basis. Similar way, I'll just reverse psychology. For this is for him it is revenue, for you it is expense. So you will recognize your expense only when you have received the service, and for him it is revenue, so he will recognize revenue only when period has been completed. 1 month is completed, for 1 month total amount and divide by 12, and whatever the monthly value will come, that he will recognize in his revenue as well as his cost. If he has given any maintenance related services, so he will have some cost, so he will apply accordingly, or if not, they may apply average cost based on their anticipated total cost normally occurred based on their historical data. But at the end of the period, when they are closing their income statement for financial reporting purpose, at that time he will remove their average and he will replace with actual cost what they have incurred for entire 12 months. If he has not incurred anything, he will remove their total cost. So because at the end of the financial reporting, that should be based on the actual cost. So if you have not incurred any cost, it means this period is completed, so now there is no responsibility for you to incur the cost after that period. If there is any cost will come after this cut-off period, then again they will have to, you can also bill him, and then they will have to pay you for revenue, then only you can give the maintenance service. But in this period, if you have not incurred, so you have to remove this. If you have incurred, then that also you have to pass the adjustment entry based on the actual. I hope it is clear to you. So monthly we may do average costing, but closing purpose we take actual. I hope it is clear to you. If you are having any confusion, you can write me, you can ask me. Okay, so I'm done for the day. We'll see you into the next session. Stay tuned. Thank you very much.